Ladies and gentlemen, please welcome Tony Vanetti from WHAS Radio.
Check 1, 2, 3. Hello, everybody. Welcome out. Mercurio Wealth Advisors night out here on a beautiful, beautiful Thursday. I am Tony Vanetti from 840 WHAS. I've been in the market for 32 years. Oh, man. I was just telling somebody, like, the 90s feels like 4 years ago. It's a lot longer than 4 years ago. But you all are here the same reason I'm here. My wife never goes to anything that I do. When she found out about tonight and we're going to talk about the economy, she was like, I'll go. Because we're all kind of freaking out about what's going on. Everyone's kind of going, what? Interest rates up, gold is down, oil is doing whatever. I have no idea. Now, I like to leave it to the experts. Now, I finished building. There was too much shade on my back deck, so I decided I'm going to build a thing to block the shade. I went a little overboard. 6x6s, poured concrete, did everything, did it all myself. Now, it's sturdy as heck, but it ain't square. And my kids call it the lean-to. But I would never, I'm going to do that because I'm a pretend carpenter, and I have friends that are carpenters that came over and went, oh, bless your heart. But I would never have my finances, I wouldn't take the chances of doing that by myself, right? Like, I'll do the lean-to and block the sun. And by the way, it's Jackie, it's a good thing, the lean-to, right? It's beautiful, thank you. But I would never do the finances myself, right? I wouldn't pretend to do that. I'm going to leave it to the experts. So, and that's a great idea because we're all unsure of what's going on, and we're all real close. And whether you're retired already, because that's the key. If you're retired already, you got to keep a wrench on it as much as you are leading up to it. So that's what you're going to learn some things today. If you come away with one or two things today that you can use in the future, I think that's a win. So, and you're going to love the speakers tonight, including Scotty Davenport. He'll be here. He's got alumni practice tonight. He actually is going to put a suit on, which is unusual because he is really cheap, and he wears nothing but his own basketball stuff everywhere, even to church. Tom Siomades, I've been talking to him. You're going to love West Point graduate, and his son, he just dropped his son off to West Point a couple of weeks ago. You're going to love Tom. He's going to be the keynote a little bit later tonight. And then, of course, Alan Mercurio and Troy Bolton, two of the smartest guys I know. They're going to try to get you where you need to go. But right now, if you're hungry, there is a full buffet for you to right there. We're going to get you to eat, and then we're going to start this entire thing. Is that fine? Is that cool? All right. Again, thanks for coming out today, everybody, and let's go eat. Hang on. I'm sorry. I was a little hungry, so I went to the food first. Let's call up the bosses, Troy and Alan. Give it up for them. These guys are the ones that are taking care of us.
So, you know, the problem with not giving somebody a script is
that's what happens.
Things just kind of go south. You know, and I was thinking about what we were going to talk about tonight, and the best laid plans or best made plans sometimes go awry, right? We were planning this event, and we had, first we got an email from Coach saying, oh, you know, I forgot the alumni practice is the same night, so I can't get there until about 6:30. And I thought, okay, well, we'll work around that. And then this morning I get a text from Tom and says, oh, my flight's delayed, so I won't be here till 5 till 6. And I'm like, all right, what's plan B? So
I'll do everything.
But that's the whole thing we're talking about tonight. Plans are sometimes skewed a little bit. What we're going to talk about tonight is really how to make sure that your all's plans don't go there. One thing that we're both very proud to say is we've met with several people in the last several months talking about their plan, putting it kind of on a treadmill, running a stress test on it, making sure it's not falling apart. And I'm happy to say I haven't found one, I know Troy hasn't found one either, that has been broken down or anything. So the way we've built our retirement plans, you know, they're down a little bit. We know that. You all know that. We know that you all know that. And, but I think you're going to get a lot of good information from Tom tonight about where we think the market's going and what we can do about it.
And that's why we build the plans that we do. That's why we develop the Retirement 360 game plan, to build in that protection for our clients, but also take advantage of when markets are good. But we know markets are down right now, and everybody's a little nervous. And that's the hardest part's when you're retired. You're not putting any more money in, and things are a little fluctuating like they are now. So that's why we wanted to bring everybody in. So you're not only hearing it from us, you're hearing it from industry insiders like Tom, that's going to talk about what's going on in the market, how did we get here, and where do we go from here. So that's really why we brought you all in, and so we can all learn from everybody.
Yeah, so as Tony said, we are going to go ahead and eat first. But we're going to bring up Shannon White. Shannon is the director for the Alzheimer's Association. She's going to talk about how important that organization is. And I will tell you that Troy and my mom passed away in December from Parkinson's-related dementia, which is very, very close to Alzheimer's. And it was his grandmother, my mom, and you know, I think everybody in here has probably been touched by this horrid disease, and they are a great organization, and like her to come up and just kind of talk about it. We are going to be participating in their walk later this fall. We hope that somebody in here, or all of y'all in here, will participate with us and try to raise money for this great organization.
So one thing I'd like to say about this organization is a lot of people, the caretakers especially, don't know the resources that are available. My mom was the caretaker. She moved in with Mamaw, and I saw how hard that was. It's extremely hard. So I'm sure somebody in this room will be touched by that at some point in their life. So that's why we wanted to bring her up, so everybody can know what resources are out there and you can take advantage of them if that happens to you. All right, Shannon.
Welcome.
I'm Shannon White, and I'm the chapter executive for the Greater Kentucky and Southern Indiana chapter of the Alzheimer's Association. We are so excited to be here this evening and so grateful for Alan and Troy for inviting us. It means so much. Like Mercurio's slogan, our sole focus is you. Our sole focus is on the families that we serve across Kentucky and Southern Indiana. That includes 100,000 Kentuckians across the region that are affected from Alzheimer's and dementia, and 200,000 caregivers that love them. With a staff of 14 from Evansville to Bowling Green, we provide caregiver support groups, community education, and 24/7 helplines so that our families can reach us anytime they need us. Some of our programs include a program called the 10 Warning Signs of Alzheimer's. It's one of our core programs, and we give it often. We give it to corporations, to community groups, to families, to church groups, and libraries all across the region. And one of our families saw this firsthand when Peggy came to one of our 10 Warning Signs of Alzheimer's. Her husband, John, who worked with an amazing financial advisor like Alan, and had decided to retire comfortably. He didn't need to work anymore. His years should be filled with relaxation, rest, anything he wanted to do. But he kept applying and accepting jobs to be a Walmart greeter. So when she came to one of our programs, she realized that he might be showing some of the warning signs of dementia. She took him for additional testing, and after he got the diagnosis for Alzheimer's, she became one of our most involved volunteers. Not only is she leading support groups now, but she's going to Frankfurt to help us change legislation to improve long-term care facilities. And she's also helping us fund our mission for critical research to hopefully find a cure for this disease someday. We've been able to help her navigate through the diagnosis and through this journey. In all of our families, we help them find hope, love, and support. And we couldn't keep that sole focus if it wasn't for community partners like Mercurio. So tonight, they didn't mention it, but I will. They are matching dollar for dollar every donation that is going to be made. You'll find these envelopes that are back at the table, back there in the corner, and you can donate here, you can donate online, you can put cash or a check. Every dollar in the fight against Alzheimer's matters. Lisa here in the purple also works with us. She's our Louisville Walk manager. She's amazing. And she wants everyone here to join us, the Louisville Walk to End Alzheimer's. It's Saturday, October 15th at Louisville Slugger Field. And we will have over 2,000 people and 250 teams there. It's really a giant support group of people who get it and people who are there to support others. So thank you so much again for having us tonight, and we appreciate all of your support.
So the next speaker, we got Tom Siomades. He's our Chief Investment Officer from Kansas City, actually Topeka, Kansas. He's, like Tony said, he's a West Point grad, been in the industry for a very long time. Most people know or are familiar with AE Wealth Management. They're the ones that help us manage our portfolios. He oversees over right around $17 billion. So it's a lot of money, a lot of insight that we get from him. And the reason we wanted to bring him in, he's an industry insider. You all have listened to Alan and myself for a while, but it's good to bring somebody in that does what he does. So if you would, help me well. I do want to let you know something that I forgot. On the back of everybody's table number, or on the front of it, there's a little QR code. If you want to, if you haven't had a review in a while, if you haven't met with us before, scan that QR code. That'll actually have our schedule on it. You can schedule an appointment, 30-minute appointment, come in, see us, talk to us, and see what everything's about. Sound good, guys? Here's Tom.
How's everybody doing this evening? Good. Thanks for coming out. I don't know who that fat guy was on the video, but it was funny. One time we were doing a meeting out in we had an advisor event out in Prague, and they had this headshot of me, and you know, just seeing my face like 12 feet high, and the expression. Like, I'll be honest with you, I'm not exactly the most photogenic person. I generally have a puss, and people think I generally have a bad attitude, but I'm golden at heart. But I literally look like a Serbian like war criminal that was. So I got a lot of laughs out of that one. But you know, the other thing is that, you know, Alan was saying this morning about how, you know, I texted him, and I should have known I was going to have a problem when I looked at my record locator for the flight. You know how it's normally like 6 letters. It said Mr. B-I-C-H. And I kind of think, is God trying to tell me something? Because this. So anyway, we ended up getting here, but I'm glad we were able to join you. Like Troy said, I've been doing this for about 30 years. I've managed money. I've done manager research. I've done trading. I've done client support and relationship management. The beauty of all that is that I get to do it at AE Wealth Management. I still get to do all the things. I manage money, I research managers, I oversee managers, I work with our trading team. I talk to wonderful folks like yourselves and to our wonderful advisors. It's just a little bit of everything. It's kind of like a investment buffet that I get to partake, and I really honestly would have thought that if I were to be able to do anything like that, it would be in a place like, Boston or New York or, San Francisco. And for whatever reason, it just happened to come together in Topeka. And, it's a wonderful company. They really love their advisors. They love the mission of their advisors. And by extension, that means they love you guys and want to help you guys. And, my career, from the military, and I guess from a very young age, has always been one of service. So, I served our country. I was happy to do it. But at the end of the day, I also want to serve people in what I do. So, investments can be difficult. It can be challenging. And what Tony was talking about with his sort of lean-to analogy, I look at, financial advisors, like folks like, Troy and Alan, as sort of your financial healthcare professional. Like, you wouldn't try to operate on yourself. You'd go to a doctor. Yet a lot of people try to do investments on their own, which is kind of scary. So, they do this 24/7. They're here for you. And the other thing that's important for me is we often don't pay attention to the stuff we don't pay attention to because we're busy with our lives. It's our kids, it's our normal jobs, it's the things that we've done. The challenge here, though, in all honesty, is that, you know, we only care about this type of stuff because it's not part of our main focus every day when things are bad. And so, you know, we tend to make very bad decisions when we're emotional, right? I challenge anybody here to wake up at 2 o'clock in the morning after sleeping for 4 hours and do their taxes. You're not going to do very well. So anyway, with that, I'll have some more sort of, you know, high-level thoughts on advisors and their help for you as we get to the end. But I just want to really quickly bring you guys up to date on where we are sort of with this economy and with this market. I know it's been a hard and challenging year, and, you know, not exactly great to take some amount of you know, sort of fortitude to get up in the morning and go see folks, you know, when the market is down 500 points. Just not a lot of fun. So if we can all kind of bear with me as I go through this thing, you know, I'm happy to talk after if people have specific questions. So first things first. So compliance gave me this slide. And if you look at this slide, I have a slide that looks kind of like this. It's a little bit different. So try to follow along on this slide because this slide kind of gives you a timetable. So let's go over really quickly what's happened the past couple of years without really wallowing in it because we've all lived it, right? First things first, you know, we got this virus, right? Everybody knows about the coronavirus. You know, I know it affected people differently, you know, and more severely, and some people thought it was, you know, no big deal. Other people had family members that were lost to it. I get it. You know, it's everyone's experience is personal, right? So at the end of the day, we had this virus, and then the next thing that happened is we started giving people money. And at first it was pretty good because, you know, we shut down the economy, right? You shut down the economy, you got to give, you know, people got to buy food, people got to do basic things. So that initial round of stimulus that came out in 2020 wasn't too bad. It was a couple $1,000. People got some money. It was good. People were home and businesses were closed, so it was at least, you know, kind of kept us from, you know, going completely under. As we moved through the summer, you know, we ramped up and we got into election season, right? And so, you know, regardless of where you are politically, I mean, I've got my ideas and we could talk about them privately over beers, but at the end of the day, you know, this is not the place for it here, right? But we did have an election. And what I kept on saying as we went into that election was that policies matter, right? Policies are going to have an impact. And I was like, what are you talking about? I don't like Trump. He tweets. He's really nasty. He's a mean man. And Biden's such a you know, hale, established, you know, politician, and we're going to bring some decorum back. And I'm like, yeah, that's fine. You can feel personally however you want. We all voted for the high school vice president or you know, our college president or whatever. That's all fine and good. But at the end of the day, what are the policies? And I try to look past the fact that, you know, Trump may have been obnoxious to people and may have been competitive and not presidential, whatever you want to call it, but I like the policies, right? We had cheap gas, we had low inflation, we had a lot of people working, and the wealth was being spread across, and the market was doing well on top of that, right? So try to think of it this way. He's not going to babysit your kids. You're not going on vacation with him. And, you know, you're not playing golf with him every week. So who cares if he tweets? But people did. And it was enough because in this sort of pandemic-induced fear that we were having, you know, where people were worried about, you know, lockdowns and reopenings and vaccines and this and that, you know, this person got elected, which is, you know, that's what we do in this country. We elect different people. But yet the policies were what mattered. So on day one, if folks remembered, after the inauguration, what happened? There was like a stack of 50 executive orders. And one of those executive orders shut down pipelines and began the war on fossil fuels, which at that time people were like, so what, you know, gas is affordable, it's no big deal. And, you know, it had only, I mean, we had seen gas basically, folks remember, during the sell-off during the pandemic when we dropped like 37%, gas actually, in April futures actually went negative for a couple of days, which is amazing. Like, people would pay you to take a barrel of oil, if that could even possible. But that happened, right? And, you know, gas prices were incredibly cheap because nobody was driving, everybody was home, and they hadn't really, you know, fully recovered. So, you know, as this new administration comes in and they begin picking on the energy industry. The other person that's in the room, again, not on my slide because I don't know why compliance has a problem with Jerome Powell, but think about what Jerome Powell was doing up until last year. He just got confirmed in March, right? So are you gonna be the guy last year who's telling the president, I need to raise interest rates and expect to get a job? So there was a lot of politicking going on. So the Fed kept that spigot going that much longer. And then obviously we had the infrastructure and the America Rescue Plan, and all this money was given to people to, basically spend on stuff when an economy was still on the verge of opening, but it hadn't fully opened. So what happens when you go to the store and you see 3 things and there's 10 of you to buy it? Well, they get sold out or the price of those 3 things go up. And so, we in essence had inflation run up from somewhere in the neighborhood of 2% at the beginning of 2021 and about 4% GDP growth to yesterday we had a reading, I don't know if folks saw, but we were about 9% year over year in CPI. And this morning the producer price index, which is the inflation that manufacturers of the stuff that we eventually consume, was something like 11%. So there's no end in sight that we can see. And to that we've been treated to various explanations. First, don't worry about it. This is just going to happen. It's transitory. Then it was in the case of oil, it was big oil, and it was Putin's price hike. It was the gas station owners. It just seems to me like right now we're at a place where we need help from both places, right? We need help from the Fed to stop making money easy, which they're doing by raising interest rates. But we also need the government to get serious about helping, by not asking to spend as much and cutting back on spending. So, that's kind of where we are. I don't want to beat it to death, but it's not a good place to be, honestly. I mean, we've got a slowing economy, which I think by the end of this month, you'll see the GDP declined in the second quarter as well. It was already down in the first. So we would have gone from 6.9% in Q4 of last year down to, I don't know what it's going to be, like 2%. I mean, that's a huge swing. That's like a 10% decline in, the production that our economy is capable of. So that said, we'll talk a little bit about GDP. So the big spike in the big bear tooth there is what GDP, what happened to GDP when we shut the economy down. That's never happened in modern history. I don't think it's ever happened in history at all. But the fact that we literally said we're going to take 2 weeks to flatten the curve, and then that turned into a month of shutdowns, and I literally laughed. I mean, it was like back in March. I literally laughed to myself when I heard the mayor of LA say, I don't know that we're going to open up this city until maybe August. I'm like, are you kidding me? People are going to stand for that? And look what happened. I mean, it was a nightmare. And it's like these petty little tyrants, got a little taste of power and literally destroyed our economy for the next, few years. It's going to take time to dig out of this thing. So anyway, if you look at that trend line, you can see that GDP is barely back to where it would have been trending had the pandemic not happened. And now the worrisome thing is we're actually starting to tick down. Retail sales, again, we talked about this, right? In the sense that, sales tanked. People were home. I mean, there was a lot of online buying and a lot of, slippers and pajamas and Netflix being one. I mean, who watched Tiger King? Was that like did everybody watch Tiger King? There you go. All right, so it's like everybody wore out their Netflix account. Everybody bought every form of pajama and My Pillow and all that stuff. Okay. But that still wasn't enough to bring the economy back. But then all of a sudden the economy starts opening up, and what's happening, we'll see it in a different slide, what's happening is all of a sudden sales just started going through the roof. But because we've got things in place like, did you know, like I've heard that, and maybe it's not true, but I heard in California that it's illegal to have a gas-powered lawnmower in some places, okay? Well, you got gas-powered vehicles that need to get stuff from the port to us, the rest of the world here. So if I can't run a lawnmower in California, how am I going to run a diesel truck? So, those supply chain things started to pop up, right? And you saw the pictures months ago, right, where we had oodles and oodles of ships out in the ocean. Well, you know what, folks? They're still out there. They just parked them further out where we can't get a good shot of them. So somebody got their PR hat on. But what happened was, you know, in essence, as we started seeing the price of goods go up, it was this sort of, you know, self-fulfilling prophecy where people are saying, well, I better buy whatever it is I need to buy today because it's going to get more expensive later, right? So, you know, you saw this huge spike in retail sales from the inflation component of it, and also from the fact that people had a lot more money that they had socked away. And I'll show you that slide as well, which is amazing, but you know, everything that goes up goes down. So retail sales are sort of tailing off now because I think people have bought whatever they can, and now things have gotten so expensive that they got to start making choices, right? Now it's a question of whether do I fill my tank of gas, put food in the fridge, heat my home in the winter, because all this stuff is expensive, or do I buy something discretionary? And I don't know if folks have traveled, but you know, the airlines, I don't know what all is going on there because, you know, they're expensive, they're crowded, and they're not working. So, you know, there's a lot that's gobbling up discretionary spending from folks. And so, you know, that's really what's driven a lot of this inflationary pressure is you had easy money, free money, and then you also had this pent-up demand. I can't believe that, you know, the fact that we basically, you know, had, what, a 3-month period that should all of a sudden shouldn't explode. I mean, I read an article today that was talking about how there's this thing being called revenge vacations because people didn't get to go on vacation the last 2 years, and all of a sudden they're gonna like hit vacations like, you know, like it's some sort of like Mike Tyson fight. And it's like, guys, it's a vacation, relax. You're supposed to relax. Anyway. Okay, so we talked about the jobs aspect too, and actually, you know what? Let me just show you this slide real quick, and then we'll go back to the jobs. So this is what happened during the pandemic. People saved a boat ton of money, and they had all this money, and they paid down credit card debt, and then the deposits were really healthy. So when things weren't as open as they needed to be and supply chains were backed up, that number right there started coming down. They started spending that down, and we haven't gotten the other tick on that number yet, but it's going down. Savings are going down because things are much more expensive, and also, you know, people are using their credit cards. I mean, think about this. My original flight here, and you know, I'm sure it's probably the same in a lot of places, but when I first committed to coming out to seeing, you know, Alan and Troy and helping out with this event, it was $1,100, right? To fly from Kansas City, I mean, I don't know how you all feel about Kansas City, but it ain't great shakes. It's all right. It's a nice place to be from, but you know, it's not exactly Paris, France. To Louisville, right? Which is like, you know, again, I would say that's about the same as Kansas City, right? I mean, it's a nice place. People are fine, but you know, it's not exactly, you know, Macau and you know, Las Vegas or whatever. So $1,100. So could you imagine doing that for 4 people? And what if you were really going to like Orlando or something? What if you really were going to Paris? So I don't know how long that number stays like that. That's going to come down, and at 9% inflation and everything else, and you know, people are out there yakking about how oil is down 30 or 40 cents. Well, that's great, but that just means I'm a little less pissed off when I go pump gas. But what about the other stuff? Like my wife comes home the other day, $8.99 for American cheese. Like, what is that? That's like lard. There's no flavor to the damn thing, and they want like $9 for that. What if you got like real cheese, right? So my wife's like, I'm not even going to tell you what I paid for, you know, the Havarti or whatever that was. I'm like, don't tell me because I'll choke you. So, you know, I'm happy that gas has come down. Honestly, I genuinely am, right? But at the end of the day, it's only one component. You still have, you know, rents are going up for people. Eggs, ridiculous. I mean, the eggs were ridiculous. I mean, that's kind of like, I don't know. I normally try not to look at that stuff. I let my wife take care of that, and I just throw. I'm like the 8-year-old kid, right? I just keep throwing stuff in the cart until my wife tells me I can't put it back. But now I'm looking at it. Like, it's like you got a dozen eggs, and you paid like $4.19 for a dozen eggs. When 3 years ago, and I don't mean to sound like you know, like Grandpa. I remember when an ice cream cone cost a nickel. I mean, I get that. All right, you know, we made fun of that growing up, right? But that was in like 1940, right? It wasn't like 3 years ago, right? So that's kind of the part that's super disturbing for me. So, you know, again, one of the other things that we could talk about as well that contributed to all this is if you look at this job trends line, and this goes back to 2005, and you see kind of after the financial crisis and say, you know, when we finally bottomed out, which was around, you know, 2013 or so, and we started coming back. Look at that trend line. And then obviously all these jobs that were basically, you couldn't go to your job, right? I mean, they shut down. You saw the stories, the sob stories about all the people that, you know, they had a restaurant and they couldn't open it and they were doing takeouts and this and that. I mean, it was horrible to see, but yet those jobs that they keep telling us, oh, we got a really great, strong jobs number right now, those are all jobs that are just coming back now. And a lot of them are coming back super slowly because people still have savings from the pandemic. They're sitting on that debt. So they're saying, hey, why should I go get paid, you know, $12, $13, $14, $15 an hour when, you know, I can sit at home and, you know, live off of these savings. So those are kind of all the headaches, and I just don't want people to fixate on, you know, when you hear on the news that, well, there's nothing wrong with the economy because we have job growth. Okay, I put that in the category of the gas being down 40 cents. I mean, it should be looked at holistically. It's everything you pay for at the store. It's everything you pay for airfare. It's not only the gas that you put in your tank, but it's also, you know, the rest of the things you spend your money on. And if you and so ask yourselves, when you get confronted with this kind of stuff, because people love to push one point when they think they want to be right and they want to shut you up, right? So, you know, when you think about inflation and somebody says, well, gas is down, and you're like, well, I'm supposed to feel good about that, right? But then step back and say, well, yeah, but inflation means what I spend on stuff. And have you changed, has anyone in here changed their habits on what they spend on stuff? Even when gas was $5 or not? Yeah, well, I think we all have, right? I don't think we're living the same life we were living 3 years ago. So, you know, when somebody gives you this hollow argument that gas is down 50 cents and we got these great jobs of people that don't want to leave their house because maybe they didn't see Tiger King, I don't know. But, you know, at the end of the day, you know, we're not in a great place as far as the economy is, and I wouldn't believe people that are telling us, because what I do believe is what we talked about earlier, is that we're going to get a second negative reading of GDP in 2 weeks. And by definition, 2 negative quarters of GDP is a recession, okay? Now, you can spin that any way you want, and I saw someone on the news say, well, it's just a bunch of, you know, stupid academics that they don't know what they're doing. Well, okay, then who does know what we're doing? So are we gonna like turn into this upside down world where negative economic growth is actually positive? I don't know. I mean, we're in this time and age where I guess, so I tell, every time I get frustrated with stuff, this is what I tell my kids and my wife. I said, you know, if I could give America one gift for Christmas, it would be a dictionary. Look up what these words mean. Look up what the word liberal means, and look at what the word, you know, progressive means, and look at what those words mean, and then look at the actions. And these actions of where we're living in a country where, you know, people are just behaving silly, right? And they're willing to engage in these arguments that should not be arguments at all. And this is affecting us in the form of policy. We've got a transportation sector. This is, before I get into, you know, I don't want to get into the character assassination stuff, but if things are going so great and everyone's so happy, and we say that 90% of the country thinks we're on the wrong track, how come not a single person from this administration not been fired? You got a transportation secretary that doesn't know anything about transportation. You doesn't know an energy secretary that doesn't know anything about the energy sector. You got a border guy who doesn't know anything about the border. I mean, where does it end, right? So the point is, like, when did we become unaccountable, right? And being unaccountable is really great when things are going great. But when things are bad and you're looking for someone to blame, like, who's going to believe this Putin price hike nonsense? I mean, that's got to stop. And I think that's one of the things that has happened in, you know, as we've succeeded through these generations, of the fact that we've just stopped being serious. And we need to have a serious discussion with people. And, you know, and I'm not talking about, you know, arguing with people over nonsense, but at some point in time, it's just okay to say, listen, you know what? Until you understand what it is that you're telling me, like a man getting pregnant, we need to stop having I'm done talking to you right now, okay? Come back when you got that dictionary. So anyway, so let's talk about specifically about the markets. All this funk, again, has created a situation where the market is concerned about interest rates going up. The market is concerned about the impact of those interest rates and a slowing economy on earnings, okay? And yet, all we worry about is the two boxes on my left, your right, okay? That's all we ever worry about. We worry about a market going down 20 to 30, 20 to 40%, okay? It's legitimate, it can happen, it has happened. You can see it's happened 4 years. Out of the last, what is that, 90, 80? So we spend our time worrying about the worst possible thing when in reality, we forget about, look at all the years where we've been positive to 40%. So here's what I want you to remember about the stock market, okay? The stock market is going to be positive 3/4 of the time, okay? If I gave you that's the musical interruption. If I gave you a coin that had, I know this is hard to believe, but work with me since we're talking about anything we want with respect to definitions, a 4-sided coin, okay? And 3 of those sides were one value, or tails, and 1 was heads. And I flipped that coin. I called tails, I would win probably 3/4 of the time on average, right? And that's how the market works, right? The market over time is an adding machine. That's what Benjamin Graham, who's one of the fathers of value investing, said. He said, on a daily basis, the stock market's a voting machine, and in the long term, it's an adding machine. So that's what you're looking at. You're looking at compounded growth and earnings, okay? Now, I know it's hard because we're down 20-some-odd% so far this year. It's ugly, but we will get through this period. We always have. And so, you know, I'm not going to tell you and stand up here and say, hey, you know what the market is done going down, and if you haven't sold to this point, you've taken the worst of it, and you know, just wait, it's going to come back in 6 months. That's not fair. That's disingenuous. I don't know that will happen. However, what I do know is that if you, and this is where we get back to using a financial advisor, right? A sober assessment of where you are from a risk perspective, right? And also someone else in the room that can kind of sit with you and say, well, wait a minute, are you sure you're wanting to do that? Because we, again, make bad decisions when we're emotional or we're uninformed, and sometimes it's a combination of both. So in a scenario like this, you know, my advice to people is, look, revisit your plan. Never be afraid to pick up someone that you pay, to pick up the phone and talk to someone you pay for and say, hey, you're an advisor, I want advice, help me. The other thing I find is that, again, I do a lot of studying of behavioral finance because I think there's way more emotion in the investment game than, like, people want us to know it's all science and it's all, you know, legit and it's all studies. Yeah, there's some of that. You need the data to make sound decisions, but people make decisions emotionally. We're an emotional animal. That's just the way it works. So what's interesting is when you sit down, and this is, it could even be a man-woman thing too sometimes. Like I find women to be a lot more rational. I know, I'm sorry guys, but you know, it's true. Like my wife is way more rational than I am, okay? And I find throughout my experiences that you know, women just look at things differently, which is a great perspective. Guys tend to be a lot more macho. Well, I could take risk, but then, you know, the minute the market goes down 5%, they're in there crying that they lost 5%. It was like, well, that's not a fair, you know, you can't tell me you're risky on one end, and then when you lose money because the market is right 75% of the time, and 1/4 of that time it didn't work out for you. So I would urge that you have an honest conversation with yourself first, and then with your advisor. Okay. The other thing is if you have been overextended in this market and you really are bothered, we're still way ahead. Even 2 years, like we haven't even given up levels from 2 years ago. So if you were overly invested and you weren't in the proper allocation, think about it. You could literally sell out today and still enjoy the benefit of what you got, your ill-gotten gains, if you want to call them that, up until 2 years ago, because you probably wouldn't have made that much if you were in a traditional allocation. So you know, there's never a bad time, but the other point for me is, you know, it's always the best time to make a good decision, right? So you should be able to sit down with your advisor, go ahead and have a, you know, a heart-to-heart. If you're comfortable with where you are and you're okay with your plan, that's the whole point of it, right? You should not be tossing and turning because you see the market going down or up or, you know, being elated. I mean, I have to watch this stuff on TV every day, so, you know, you don't. You have other options, right? And that's why you hire folks like, you know, Troy and Alan to help you. It's their job to watch the markets and to help you, and it's my job to watch them too. Now, unfortunately, a lot of people find like news consumption and, you know, watching, you know, Wall Street stuff, like it's become a form of entertainment. Admit it, folks. I mean, there's people that watch CNN or Fox News every night like their regular shows. And it's like entertainment at this point. So ask yourself, is there really any news out there? Or are we talking about the fact that, you know, there's 2% or 5% or half an hour's worth of news in a 24-hour news cycle, and the rest of it is all opinion, meaning to just stress us out and get us to do something we don't want to do and freak us all out and turn us against each other. So, you know, anyway, I digress. 75% of the time, the market is going to win, okay? So the question is, you're gonna have these down periods. It's natural. We've been kind of spoiled the past few years. A lot of it was because the Fed was just keeping rates so low. When's the last time somebody went to a bank and bought a CD around here? See, you laugh, right? I had, after like the worst days, I would like drive by this bank by my house and they had like this huge poster that was like 30 feet tall and they were like promising like 0.45% on $100,000. And I'm looking at it, it's like, you know, it's like, how much did you pay for that sign? Because you're probably like, everyone's losing money on this deal. And it would be a great laugh and, you know, then I'd move on, but then I'd start crying because, you know, so that reminds me of like one of my favorite jokes. And what's great about this is I could tell the same joke to different people and it's new to you guys. So anyway, here's my favorite joke for really bad markets. So people ask me sometimes, they say, hey, Tom, how do you sleep at night, like with the market the way it is? And, you know, I say, hey, I sleep like a baby. And I'm like, really? Yeah, like a baby. I wake up crying every 2 hours. So that one was minted back in 2008, and that's like, you know, that's the test of time. So I hate for a bear market to come back just to use a joke, but it's unfortunate. But anyway, so the other thing, this is another item I want to make sure people are very confident and clear on. First off, there's a difference between timing the market and spending time in the market. Remember what I told you about Benjamin Graham? He says in the long term, the stock market's an adding machine, right? So if you think you're going to be cute and you're going to pull money in and out of the market and you're smarter than everybody else and you're going to, you know, grab pennies in front of a steamroller, just remember, if you stay invested for the full period, the ups, the downs, the uglies, the in-betweens, you name it, the Elon Musk buying Twitter or not, or you know, Martha Stewart going to jail for insider trading, whatever. You're getting 10.5%, okay? And if you miss 10 of those days, which is very possible. Now remember, market timing is a two-phased decision. You gotta know when to get out, and you gotta know when to get in. If I could accurately tell you when to get out and when to get in, I would not be doing this. I would be going to Vegas every day. And I would be making a boatload of money because I could say, bet on that, bet on that. But what we actually have, since we're talking about gambling, what we actually have is a roulette wheel that's like 75% black and only 25% red. And I would take those odds all day long. I mean, you know, a good baseball team or football team or whatever, you got a 600 winning percentage, 700 winning percentage. That's awesome. Stock market's 750. You ever see somebody in baseball bat 750? No. They get in for being a third. A good money manager is only right about 55% of the time, but over time, succeeding that way. So, you know, let the process work for you. Have a good advisor, have a solid plan, and don't get out of the market and try to time it because that is the hardest decision anyone can make. Now, I wouldn't say that if you decide that your personal situation requires you to take money out of the market, that's market timing. You need the money, but be smart about how do you do it. Dollar cost out of it or dollar cost into it, you know, those kind of things. But there are techniques you can use. But these people that, you know, literally like, you know, go into their 401k account or into their brokerage account and 100% cash at the end of the day, and then tomorrow I'm going to do something else. It's like, I mean, look at what happens. And I would venture those people are probably on the other side of that scale, and they're probably they're looking at a whopping 2%. Then by the time you're done paying fees and all that stuff, you're at 0.45 CD. So who's the joke on now, right? You could have had 4.5 without all the gray hairs. So anyway, that's an important one as well. And then, you know, let's talk about, you know, what potential kind of asset classes may work in a inflationary environment. Well, think about what would work. Bonds typically don't work because I remember when I used to work at the Hartford, the insurance company. So I was a young guy, and I was really enamored with the traders, right? Because the insurance companies have humongous bond books, right? Because they're matching asset liabilities, and they try to inoculate the sort of, you know, potential losses, and, you know, they try to like just match assets and liabilities so that things, you know, there's no surprises. So I thought these guys were gods, right? And I'm there in the 90s, and which Tony was like yesterday. I too agree. But anyway, so I think these guys are gods until I realized that what was happening from about 1981 till about 2005. Okay, I remember my dad paying 14% for a mortgage in 1970 something, okay? People up until about a year ago were like 3% for a mortgage. So what was happening in early 80s? Interest rates were like here, right? And from 1981, 82 to 2005, you had this continuous drop in rates, right? They were riding the yield curve down. So think about it. I'm thinking these guys are gods because they're making money all the time, and they're getting taken out to dinner, and they're going to these fantastic destinations for conferences and tickets to, you know, baseball and football games. And all they're doing is they're buying a bond today, right? And then selling it tomorrow because, you know, of course it's going to be worth more today because it has a higher interest rate because rates have come down. So if I have a 6% bond, aren't you going to give me more money for it if the current rate for a bond is 5? Makes sense, but, you know, I was naive, so I learned about bonds. So bonds in the negative environment, in an inflationary environment, are bad because think about it. If you're paying something and that's a fixed cost, as money gets more and more expensive, that money buys less. So, you know, if inflation is at 9% and you have a bond that's paying 5%, your buying power is negative 4% at that point. Gold, I don't know. I don't know how people feel about gold. I see the commercials. I see everyone holding the coins. I think they're great. I think they're shiny. My thought is, look, if you can't burn it, eat it, trade it, and maybe I would, you know, I don't know, walk around like a pirate maybe in the apocalypse and you know, hey, give me that shiny thing and I'll give you a bag of rice. I don't know. But to me, it's like, if you're going to hold something because it's going to be a store, it's got to have a secondary use, right? So for me, like, you know, ammunition or bourbon or rice or whatever would be probably better barter items than gold. But, you know, people like it. I don't knock it. I don't really use it in my investment approach. Treasury index, treasuries that are indexed to annuities, they're okay, but they can be expensive because it's an insurance, right? So I would stay away from tips right now because obviously with 9% inflation, people are not going to really want to give you a good deal on tips. So stay away from those if anybody recommends. Stocks are good in some respects because stocks are, you know, the valuation instruments for corporations, right? And what are they doing right now? They're all sticking it to us, right? They're all making great profits. And is that fair? I don't know. Are they gouging? I don't care. At the end of the day, you know, they can, if I need something, I need to pay somebody something. And stocks have a better way of passing those costs on to their consumers, and therefore they can, like what's going to happen in this next earnings season, right? Because today we had JP Morgan report and they missed earnings and they were horrible. So listen to this upcoming earnings season. You're going to hear the same tenor. It's going to be like, it's going to be hard ahead. We're going to have to lower our expectations for what we're looking at earnings the CEO's dog ran away, his teenage daughter is getting married, his oldest kid is getting divorced. Every bad thing that can happen is going to be crammed into these reports, because the way these companies work is that they want to cram everything into one report, get hammered once, and then everything after that is all gravy, because they're going to get so depressed that the next time it's going to be, look, we're 20% off last month's level. Well, yeah, because you basically dumped it into the basement. The only thing that really genuinely works strongly with inflation is commodities, and that's just the physical stuff that we take out of the ground to use to make other stuff. But the problem with that is once we stop buying stuff, that's a problem, and that's kind of where we're going with this potential for recession. So all the funds that we have and the access that Alan and Troy have, we have bits and pieces of this. It's part of a diversified strategy. It's, there's an allocation. I don't particularly play favorites. I always just get asked, how do bonds do in inflation? How do stocks do, whatever? And I tell them some are good, some are bad, but I wouldn't risk risk my entire future or make a bet on all that. Just FYI, I'm not like a person who looks at sectors. I don't really care about companies. I'm an allocator, so I look at markets, right? And I think, like, where's their good opportunity? Where's their bad? I want to be in everything, but I also will overweight one thing or underweight something else that may be weak, because I completely subscribe to that 75% of the time I'm going to win. We talk about diversification, and people, if people understand that concept, it means you have a little bit of everything all the time, right? You're not letting one thing. It's all the not all your eggs in one basket argument, right? The interesting thing about that is, in order for you to be truly, truly diversified, you got to have something in your investments that you just hate. You just got to really hate it. Why? Because when the things that you love go down the toilet, the chances are the thing that you really hate, if you have it, will go up. And so that's true diversification, because it literally moves along. As the markets go up and down, it kind of keeps your boat on even keel. So anyway, that's just an FYI. Other things that, other sort of instruments to do well over the course of an inflation. I mean, obviously, it's going to be stocks. Again, I'm not a huge fan of picking out names, or somebody says, oh, what do you think about Cisco, or what do you think about Microsoft? I mean, okay, I own them. So anyways, I will, how am I doing on time? Am I good for time? Okay. Yeah, so I guess what I would say is, it's a hard time. I mean, I'm not going to sugarcoat this thing. I'm not going to tell you it's, it's transitory or it's Putin's Putin's market crash. Just understand what I deal with on a daily basis. It's like, I've seen markets for 30 years. This stuff happens, okay? Because there's been a lot of money floated around by the Federal Reserve, and it basically gave you no other alternative than to invest in the stock market, because you were going to get 0.45% on your CD. Now, the difference between this market and inflation environment that we had in 1980 was you could go to the Treasury and buy an 18, 16%, 30-year bond. I mean, I remember managing a small wealth shop in 2008, and I had people come in and literally, like, grown men, people our age, crying because I had to tell them that I can't sell you, I can't get you a 18% yielding 30-year Treasury bond, so you're getting, a payment every twice a year. Rates were not 18% anymore, because, he was subjected to reinvestment risk at that point, and, rates were at 6%. So think about that for a second. Think about, like, if you bet all your stuff on one asset, and then you go, your lifestyle goes to being a third from what it was. So that was, that was eye-opening. So we don't have that option now. Rates are still pretty low because the banks are greedy, and they're making up for all the money they supposedly they think they lost on giving out low mortgages. So that's a challenge right now. And I think, albeit there's not a whole lot of places to hide, I think the best place to hide is in accepting that you have a good plan, doing what you can with what you can control, right? So like when I was in the Army, I didn't really care what the colonel at division was doing, or the general, or whoever. I didn't have any control of that. I had control of what I had in front of me. I had control of my men. I had control of my mission. And I did what I could with what I could. And I used what resources I had to keep me doing my job. And in your particular case, think about it. Like, think about not the returns, but think about goals. Goals are super important, right? Why do we have money? So we have money because we like money, and money in and of itself is a great thing? No, money is a tool to get what we want. So what are the things that we want? I want to leave something for my grandkids. I want to, travel the world. I want to buy an RV, whatever. The goals, whatever goals you define. I mean, it's up to you and your own household to figure out what those goals are. Once you've defined those goals, then the next step with having goals is having a plan. Because having, goals without a plan is just wishing at that point, right? You need to figure out a way to execute. These guys will show up, they'll help you do it, and they'll help you execute on what you need to execute within reason. Like, you can't come in and say, hey, I got $100,000 and I want to buy a private plane and fly it around the world. It's not going to work. But realistically, if you have what the plans are and your legacy, and then what happens is then you build a plan, and you keep hammering that plan, right? You keep working that plan to make it as better as you can, as realistic as you can, and then it's like, okay, I decided to grow a rose garden. Great, we don't have to worry about what's growing in that garden. But then what we got to do is worry about is the weeds, right? And the things that we need to do over time to make sure that garden's looking good. So that's kind of how you have to look at it, right? It's your mission is your goals. Your advisors will help you put together a plan, and then it's you and advisor you and your advisor keeps you on track to make sure that those goals are being met. Everything else after that is noise, right? All the talking heads on CNBC. I mean, one guy says one thing, another person says the next thing. Yesterday he said we're this. Today we're saying we're that. They're just wanting your eyeballs for advertising. I don't own my pillow, by the way. And I hate to say it, my mother-in-law bought me one. It was the most uncomfortable thing, and so for like a year, I was like trying to be nice with my wife, and I'm like walking around like this. So finally, enough is enough. I asserted my pillow's masculinity and got rid of it. So anyway, it's summertime. Try and enjoy your summers. Just be thankful that we live in a country that allows us to succeed, right? Despite all the nastiness out there and all the negativity, we're still in the greatest country in the world, and you should never forget that, right? I mean, think about this. Can you do something like this in, I don't know, Syria? No, it ain't happening, right? You go to any of these countries that, we sit around and they tell us how we should be doing our business, and yet, look at us. We're out here on a beautiful summer night in the country, enjoying good food among friends and, talking about our goals. Whereas a lot of people, just, they're running from crater to crater or drinking polluted water or whatever. And I mean, I don't know, sometimes we forget to be thankful. So, thank you. And I guess what's next? Okay. No, but.
All right. How was that, guys? Yeah, a lot of good insight there. A couple things really stood out to me. Alan and I are going to get into it a little bit later when we do our recap. But it's really time in the market, not timing the market. That's the hardest thing. And we realize that money is emotional. But Alan, myself, when I came in, we've developed this company built by building plans and focusing on goals. When we meet with a new client and we start talking about their goals and not their investments, we get kind of a dumbfounded look most of the time. It's like, why are you talking about this stuff? Because that's what matters. That's why you've saved the money that you've saved to do what you want to do, right? That just makes sense to me. So that's why we do what we do, and that's why we want to bring Tom in here and kind of give his insight, kind of get that insider insight to help benefit you all. Now we have another guy coming in that I was wondering how I was going to introduce him. But when I was talking to clients about him, everybody knows the guy. So I really don't have to give him much of an introduction. But what I will say about the guy is growing up watching U of L basketball, I saw him on TV. I'd hear him do interviews and stuff. I was like, he seems like a super nice guy. And most of those guys that you think are super nice when you meet them, they're not. Alan and I met with this guy a month or so ago. He's the nicest dude I've ever met. He super nice, got stories. Well, he'll take your whole afternoon if you let him. But super great guy. And the main reason we wanted to bring him is because he focuses on teamwork, building a team. That's how we've designed the company. That's Alan's dream, Alan's goal. What he set forth to when he built Mercurio Wealth Advisors was to surround our clients with the best team that we can possibly do. And that's what we try to do. So without further ado, Scotty Davenport.
Let's start doing something good. The Alzheimer's contribution. I'm going to add, everyone here tonight that makes any form of contribution, connect with the association. August, we release our game schedule. You pick out any game you want. You're my guest, 2 tickets at a home game in Freedom Hall. I will be the real quiet, reserved guy sitting with his legs crossed, just kind of politely clapping. We're going to be okay. Right up front, I'm just going to tell you, we're going to be okay. Now, experience is the greatest teacher. Always has, always will be. From the time my mother was 11 till she was 21, rural Greene County, Kentucky, she goes through parts of a Great Depression and World War II. The best we can tell, a 6th grade education at a 1-room schoolhouse. The reason we don't know, because they're all 1 through 6 are all in 1 room. And she ran her own successful business for 43 years. We're going to be okay. Now, the greatest challenge. I look at this demographic in front of me. Everybody wants to live longer and live better. I do too. Now, unfortunately, I've yet to figure out how to spell the word retire. I have trouble. But think of reality. I left practice to sprint over here. I have 3 freshmen on this year's team. Let's be real. Those 3 freshmen are going to work beyond the year 2065. Now, I look around this room. Think of that, 2065. And we all want to live longer and live better. One of the reasons we're going to be okay, us, it's because of them. They're incredible. We need them. I've got 1 grandchild, a 3.5-year-old granddaughter named Ren. She needs them. We all need them. They are the answer. I see it every single day. You say, well, Coach, that sounds good. We get them 8 weeks this summer. We're in week 6 right now, Monday through Friday. 6 to 8, weight room on the court. 8 to 8:30 breakfast. 8:30 to 9, campers arrive. 9 to 4, camp. 4:30 to 6, we're back on the court. I don't really care what they do with the other half of their day. I'll take those 12 hours. Now, what is the strength? What is the strength of those young people? Why are we going to be okay? We have lived in a phrase since I've been at Bellarmine. This is the start of my 18th year. And I think it's very, very powerful, but I think it applies to all of us, not just those players in that locker room, but all of us, from a family to a neighbor, a neighborhood, a community, a country. Think of it. None of us are as good as all of us. Now that's powerful. Now what is coaching? Like, what do you do every day, Coach? What is it? You know, 13 years ago, my mother passed away, and she said if I'd really work hard, I might get a real job, make something out of myself. Well, I haven't got that big boy job yet. I've had an advocation. I'm an advocate of those young people. A job's what? It's a vocation, by definition. Think of that. I've never had a job. I've had an advocation. So what do you do every day? Well, there's always two questions. And society right now, look at the questions. We're facing. Look at that screen. Look at the questions we're facing. They're serious questions at every level, not just financially. There's questions socially, a lot of questions. So every day, it comes down to two things: why and how. If I go in and we stress that day, that drill, okay, go rebound the ball. Okay, Coach. No, you've got to show them why. Why is that important? The same academically, the same socially. Why? Why? Well, we've got to rebound the ball because we got to get more shot attempts than they do. We owe that to them. So, to you, ask yourself every day, why? Now, why do I want to get up? Why do I want to reach out to someone? You answer that. I have to do that every day as a coach. The second question, how? That's what teaching is. How do I rebound? How do I make that extra pass? Well, I'm going to give you my two answers. To why, it's to bring out the best in you. To my team, it's to bring out every ounce they've got to be the best they can do as a student, as a person, as a player. Ask yourself, why? Well, why can you be the best? Now, I have found in my lifetime the answer to the question how is to be a part of something bigger than you, because it's going to bring out the best in you. You don't want to let anyone down. Again, a family, a neighbor, a neighborhood, a community, a country. What if we all were a part of something bigger than us? I've lost 7, I'll be real. I've lost 7 great friends, 1 to 2 years older or younger than me the last 2 years. And I go up and I pay my respects and it rips my heart out. I grew up in the south end of Louisville. I'm proud of that. Wouldn't change it for anything in the world. Grew up on Central Avenue. Right by, a lot of people had a swing set or a basketball going in their backyard. I had Churchill Downs. That's okay. Why? Why me? I was a part of something bigger than me. And it brought out things in me that I never dreamed of. I mentioned my mother. I lost my dad when I was 9 years old on Halloween Day at 1:15 in the afternoon on a Sunday. Think of that when you're 9. Halloween's a pretty good day, especially on a Sunday. 15 feet from me of a massive heart attack. But why? A part of something bigger than me. Brought out things in me. It's unbelievable in coaching every day. We had practice today. We were going through the middle. It was a very tough sequence of drills. I said, everybody get on the baseline. Ben Johnson hit 2 shots. He had 2 free throws. He doesn't hit them, we all run. Who's he shooting for? Not him. Who's he shooting for? Everybody on that baseline. Because it's not about him. Do you think he concentrated a little harder? Yes, because he's trying to bring out. He's trying to be a part of something on them. I don't want them to run. I'm going to hit them. He hit them both. Everybody said, great job. Let's go to the next drill. I have been so fortunate through basketball learning life's lessons. And I encourage you, every single day, we try to apply them. Again, I'm going back to these 3 freshmen now. They're going to go to the year 2065 or beyond. But how about this? How about this? How simple. We apply it in our games, but we apply it on a bus, in a restaurant, in a locker room, in a classroom. And I look around again, this demographic. If I gave everybody here 3 seconds, 3, 1, 2, 3, you come up with a minimum of 2 people you wish you could say thank you to one more time. So I have built every single day, we never delay gratitude. They're 18 to 22-year-old. Why should they not think they walk out of a class and just touch a professor? Thank you very much. Why not? What about that player who makes him a pass and got him a basket? Hey, great pass. Restaurant, in a hotel, on a bus. We can all. Why would we ever delay gratitude? So that's a rule. Never, ever, ever delay gratitude. And we can do that. We can do that tomorrow. We can do that every single day. You know, right now, there's 2 recruiting periods in April, 2 in June, 2 in July. Recruited last week, we'll recruit next week. Oh, I could give this table right here. I could give you three players, and you could break them down. I mean, you could break them down, shooting percentage, scoring average, assist turnover ratios, rebound. You could do that and say, Coach, recruit A, B is second. See, you could do that. Well, here's the one thing you're missing in recruiting. And this is our challenge every day. Caring, you're not going to see on that stat sheet. Caring is an incredible talent that we need more of. Caring is a special talent. Why? March 8th, we won the A-Sun Conference Championship, year 2, transitioning from Division II to Division I. I've been in some powerful locker rooms. Fred Heen is sitting right there. Final Four, Louisville, St. Louis, one of the most powerful locker rooms I've ever been. Albuquerque to win to go to the Final Four. National championship at Bellarmine, Division II, a state championship at Ballard. I've been in powerful locker rooms. March 8th, this year, Freedom Hall was powerful. That separated something I'd never seen before. They all celebrated each other. Nobody said, look what I did tonight. As the more they talked, I went into the back corner of the locker room. I just stood there. Fred knows exactly where I'm saying. That back left-hand corner, right as you come in the door and turn left, in Freedom Hall. And I just listened to them. And they were about each other. I had him complimenting a red shirt who never played a second because the month of February he was unbelievable. He said, man, Ben, you got us ready. They were thanking the managers who get there first and leave last and do the laundry and do everything you can imagine. Well, why was that locker room powerful? Go back to how and why. They all wanted the same thing, and they were all willing to do whatever it takes to achieve it. Were we the best? No. Most athletic? No. Biggest budget? No. New to Division I? Yes. Picked last 2 years ago. Middle of the pack, year 2. It taught me one of the greatest life's lessons ever. When everybody wants the same thing, willing to do whatever it takes, amazing things happen. That is powerful. We can do that. I love this. This summer, we have focused on this one thing. Give to. Fill in the blank. What do you want to give to? Your family? Your workplace? Your best friend? Ours, this summer, has been give to our program. Whatever that means. 8 weeks we have them. Give to our program. Now, Challenge yourself. Give for, fill in the blank. Us, I want you to give for your teammate. I want you to give for your teammate. Give for everybody. So give to and give for. How much better would we be? It's not hard. Doesn't take any talent. Now, the end result of that, go back to that player I asked you all to evaluate. You can tell me a good player. You can't tell me extraordinary player, because an extraordinary player is like an extraordinary person. They make everyone better. Anybody here an elementary teacher or a retired elementary teacher? Anybody? What grade? 4th and 5th. How many give me an average 4th grade class size? 30? All right, 30 4th graders go in there on Tuesday, and every single one of them tries to make everybody in that class better. Are you going to have one whale of a day teaching? Yes. You are. That's a locker room. That's a home. That's a neighborhood. That's a community. That's a country. We can do that. It's extraordinary. How good would it be? It wouldn't be good day. It'd be extraordinary. Why? Because we're making each other better. That's our goal every day. Go back to what I said. None of us are as good as all of us. It's unbelievable. Now, you know, I don't want to be political. I don't want to be scientific. But the bottom line, we as a society, we are capable. We is the key word of everything. We can do anything. We can do anything. We can make our life better. We can make, because everything is possible if we believe in that. Think of this. I have a plaque in my office. We would have never been given the power to dream without the ability to make those dreams come true. What are they? Don't ever, ever limit yourself. Get away from the negativity. Get away from it. Mention the news. Turn it on. I don't care. 2 minutes. It's the negativity is going to eat you up. It's amazing if we will embrace. I'm going to leave you with this, and I'm going to talk money, but you can't cash them at a bank. You can't invest them. But every one of us every day can strive to make an emotional paycheck. And you know what's great about those? You can cash them a lifetime. You can cash them a lifetime. I see it. I see a young man walk across the stage and get a degree who had no upbringing whatsoever. Then I see in this very room right here, I've got an assistant coach on my staff. And he lost his mother 3 weeks and 1 day prior to getting married in this very room. She was 53 years old. Tragically died of cancer in Boulder, Colorado. I walked into this and I told my wife, we're sitting in the back. If I want to sit, we're sitting in the back. Great day, he's getting married. Got an assistant job at Bellarmine. What a day. No, there was a hush in this room like you wouldn't imagine. She's 53. 3 weeks and 1 day, she was gone. Assistant principal, elementary school, she was a star. I sit in the back. You know why? Indianapolis, Indiana, Louisville, Kentucky, Northern Kentucky, Covington, and Maysville. Augusta, if you want to be technical, Kentucky. All 4 teammates on his most glorious day, but a most challenging day, stood right there with him when he got married. And that was support. I said, I hit my wife. I said, that's our program right there. We can all be there for each other. It's tough. All these questions are going to be answered. But I'm telling you, there's faith in what I look at every single day with those 18 to 22-year-olds. And little Ren, she needs them. But us, we're going to be okay too. We're going to be okay. Go back to my mom. We're going to be all right. I hope you can contribute. I lost a mother-in-law to Alzheimer's. I hope you can get to a game. I hope you get hooked. I hope you come back. I hope you bring about 10 of your best friends with you. We're going to play midweek games at 6:30. We're playing all Saturday games at 4 o'clock. Parking's free. I mean, we're trying to make Freedom Hall second home. And I know this community very well. I wouldn't trade where or how I grew up for anything. I know there's Kentucky. I know there's Louisville. I know there's the things that are said to each other and about each other. Hey, you can all come and love us. We'll take you. I mean, that's the whole, you can all come. I will tell you this. I'm the luckiest individual who's ever coached any sport, any level in the world. I am. There's no ifs, ands, or buts. I am. 17 years, we've graduated 66 out of 69 guys. We've never had a semester under a 3.0, and we've won. This past May, we had 5 seniors, 5. I told you we won a conference tournament championship. They earned 8 degrees. 8, and they won. You want to know why we're going to be okay? That's right there. We're going to be okay. There's a lot of faith. Everybody good? I will be here. If there's anything, if you say, I want to see them practice, come on. I'll sit you right next to the court. You want to bring a family, a youth team, just your buddy, come on. I've got a bunch of guys I grew up with come every day. I call them the board of directors. I just walk out and hope I get my job the next day. Now, they're all my age. They've all retired, so figure that out. I don't know. But if there's anything we can do, please believe me, we'll be there. We'll try to do it the best we can. I mean, again, none of us are as good as all of us. And it shapes lives. I appreciate you all so much, the time, and I know I come running in here and all that, but I want to publicly thank Fred. Fred Hina was with me. We were together at the University of Louisville. I can give you the inside scoop on the University of Louisville. Fred Hina was the New York Mets athletic trainer. Coach Patino calls me and says, Scotty, I'm bringing this guy in. You got to, man, get him. We got do whatever it takes. You got to convince him. Fred gets here. I mean, I get him at the airport. I mean, I've got everything lined out. I mean, it's just like an adult recruit. Fred, we can do this. We'll go here. What do you like? I mean, I researched his bio. I mean, I'm doing everything. About 2 hours in, he goes, God, you're killing me. Stop. I'm coming. I said, well, let's just have fun. He goes, yeah, let's do. And off we went. It was great. Everybody okay? Again, if Bellarmine University, if these young people, you know, every day our players, it is a commercial for their life. And I'm proud of them. I mean, they represent us. They represent their families. They're incredible. They're incredible young men. They really are. And I can tell you this, 5:30 tomorrow morning, I get to go coach them, not I have to go coach them. And there's a world of difference. And I can't wait. Practice plan's already laying on my desk, already made out. And we're going to go at 8:30 in the morning for all our campers. We're going to have a lot of fun tomorrow. Thank you all very much. Have a great night.
That was good. Anybody take any notes? I got like 3 pages.
And you know what I learned about him before? He doesn't drink coffee and he has that much energy. So jealous.
He's the kind of guy that makes coffee nervous. There you go. There you go. So we're going to close up here in just a second. I just wanted to get up here and express our gratitude for you all being here tonight. I think that hopefully you all think it's been a good program, and our purpose in this is really just to get everybody together in a spot to where we could kind of talk about where we are and where we've been. Tom laid it out very well. I've made, like I said, several notes here. You know, America's kind of broken right now, but that doesn't mean that it has to stay broken or that we have to stay broken with it, right? So we have the opportunity to build our plan the way we've built them. I'm happy to say that most of you all in here that have a plan through us, it's working. You may feel like that it's down in value and everything, but the plan is working. We have, as I said in the beginning, we've stress tested a number of them. I want y'all to feel free to have your plan stress tested. On the back of this program, there's the QR code. It's on the back of your table, item 2, that you can scan that and you can actually schedule time to come in, whether you're a client or whether you're not a client.
If you don't know how to do that, somebody on our team will come around and you can ask them.
Yeah, you just open up your phone, take a picture of it, or act like you're going to take a picture of it, and it's going to open up our calendar. But I think that's something that everybody should do. The other thing that I got out of Tom's talk was, you know, there are opportunities. It doesn't seem like it right now, but there are opportunities. I read an article just the other day that said that small cap stocks are at a 40-year low. So maybe when we come out of this, maybe we buy into some small cap stocks to get some of this back. Or maybe we look at your accounts now that you have have an IRA and it's down 5% or 10% or whatever, and we convert it to a Roth IRA and not pay the taxes on the losses that we just had. Okay? So there are opportunities that we can talk about individually. Everybody's plan is going to be different. But I think you have to keep in mind that there are opportunities.
Well, on that note, if you all have noticed and watched our emails that we're sending out, we are making changes in your portfolio. We have switched to more dividend-producing stocks. We're focusing on that income. So even though the market is volatile right now, you gotta think when you're working, you're dumping money into these accounts, you get that dollar cost average, you get to buy low when the market's down. You don't get that when you retire. The dividends do that. So if we're able to create 3 to 4% dividends, that's income that's being driven into the portfolio. Buying stocks low, when the market rebounds, it'll kick it up even quicker. So hopefully you all are getting those messages and know and see what we're doing to try to position you as best as possible.
We have had some questions. I know in right after COVID, in March of 20, we made some changes to the portfolio. The market fell off about 40% in a period of about 3 or 4 weeks. And we did go to cash. We ended up moving to cash. But this move has been a lot slower. This move has lasted over the last 7 months. And I was reading an article just the other day from people a lot smarter than me that said, you know, when we get through this, it may take us 9, 10, 12 months to get through it, or whatever that time frame is. We need to probably expect it's going to take twice as long to get back. It's not going to bounce back like it did before, or probably won't. So we just need to be prepared for that. But there's opportunities in that. So I think that's the thing that we want to focus on.
And one of the main things when we designed your all's plans, we did stress test them. We put them against markets like this. We compared them to the year 2000, when it was the worst decade to retire in. We had 3 years in a row where we were down more than 10%. And then we had 2008. So we've stress tested your portfolios before you even became clients. And that's our goal when we sit down and meet with you all, update those plans and make sure based on what everything that's went on, if your portfolio's down, making sure it still works. We kind of dubbed this the mid-year review. It's not really a review, it's more of a tactical strategy meeting. It's what do we do going forward? If we need to sit down, review your plan, I think we've met with most of you all and updated things. But if we need to, scan that QR code, pick a time, and let's sit down and talk about your individual plan.
Couple more things. Having a solid plan. I think Scotty would agree, going into every year coaching, he has a solid plan. We are huge advocates of having a plan. Everybody in here that's been with us for any length of time has a solid plan. And we've built that plan individually for each one of you. Now, they all have the similar elements, but everybody has a plan. So make sure you have that plan, make sure you're aware of that plan, make sure you're following that plan. And if you don't understand it, ask us. It has been a war on savers for the last, how many years? We actually met with a couple bankers the other day, and we were talking about, the interest rates going up. And I asked the question because I know every one of you all want to know, well, when's the interest on my savings account or CDs going up? When's that going up? And they pretty much told us that they don't have to raise it right yet. It's probably going to take one bank stepping out on their own and raising interest rates 1/4% or 0.5% before everybody else follows them, okay? Because right now they don't have to raise it because everybody's been in the same boat for a long time. So it has been a war on savers, so you just have to kind of look outside of that. And the last thing I guess I'm going to talk about, and then like I said, Troy's right about the QR code, make sure you scan that, is what works against inflation, gold or bourbon? Well, in my house I got a whole cabinet full of bourbon. I don't have a whole cabinet full of gold, so.
Either sell the gold or sell the bourbon or drink it.
No, it's just kind of trying to be funny there. But really, seriously, folks, we appreciate everybody being here tonight. We think it's hopefully been valuable to you guys. And if you have any questions, we're going to be around for a while. I know Tom's going to be here. If you have any questions for him, you can kind of.
What I will say, a few of y'all got the envelopes with the golden ticket.
Oh, forgot about that. Yeah.
So we are going to do a meet and greet with Scotty over here in the corner. If you all stick around, talk to him, probably get a picture, hang out with him.
Did you passed out the balls, right?
Yeah, we passed out the balls. Oh, the raffle. Everybody fill out one of the raffle tickets? So I know Scotty's giving tickets away, but we're also giving 4 tickets away to U of L Bellarmine game. So whoever wins that raffle, we're going to do the drawing on Monday, and I think we're doing it on Facebook. Alyssa and John will probably do it. I might be on there. But we'll do the drawing then. If you can't watch it, we'll give you a call and let you know if you won or not. But golden ticket, you can go over here, do a meet and greet, ask him whatever questions you want. And I know Tom's going to hang around too, so he'll answer any questions you want. Sound like a plan?
Folks,
Good
thank
deal.
you all very
We
much for
appreciate
being
you
here.
all.
Appreciate you guys.